The war is happening 1,000 kilometers away in West Asia, yet the flames are reaching up to India. It is not just a geopolitical conflict that is waging a war in front of us. It has to be seen as an economic shockwave which has already reached India. Hello everyone, welcome to Vajram and Ravi's Flash News. My name is Shubhangi Singh and today we are going to discuss that what are the economic impacts that India is already feeling in terms of Iran war that has unfolded, and the end to it seems unlikely as of now. Up and until today, we were understanding that what is the possibility and what India needs to protect. But as of today, we are already seeing that the impact has come straight up towards India. It is not just limited to our stock markets, to the foreign investment, the increasing oil prices, but so much more. So let us straight up move to understanding that what exactly is unfolding and what has started to unfold for India in terms of economic impacts. When we are talking about across the newses, you will clearly see that we have started to understand that be it fuel, be it remittances, be it the depreciation of rupee, everything seems to be under the economic shockwave. And the only question in front of us is that what is happening? What is the thing that matters for India and how this can be corrected as of now? So when we are talking about what matters and why it matters for India, the first aspect that we need to understand is that this, as I started the conversation with it, that this is not a geopolitical thing anymore. This is sending economic shockwaves across the globe. And that is why this war has become a very important point, important starting point, focal point of this very shockwaves that we are talking. And that is why it matters a lot to India. Now, when we are speaking about why it matters to India, it matters to India also because of the fact, as I said, when it is sending economic shockwaves, we are already seeing the impact, the consequence of those shockwaves that we were talking. Now, throughout this session, we will be understanding all sorts of economic impacts that are right in front of us. Now, starting with the first one, as we talk about today, we get to see that 12.39 lakh crore rupees has been wiped off in terms of investment. We have seen Sensex falling more than 2,500 points. We have Sensex falling for more than 2,400 points. We have seen a dip in Nifty. All of this simply tells us that global investors are already withdrawing. They are already taking out their money from Indian equities because war-like situations always make the investors go towards gold, go towards safe haven assets, which basically have lesser limited risk. So that withdrawal is already happening, and that is something that we can see right now. Now, this is the impact that we have seen just in one trading session today. If this war continues, there is a lot at stake for India and the equity market. And once the impact is created here, it is not just about global risk aversion, but it is also about a situation of market crash, which will be closing down. Now, this is just one thing that we are discussing in terms of impact. Let us look at others. Amongst the others, the first one and the most talked about one, the oil import shock. As of now, Brent crude oil has already surged to $119 per barrel. Now, when we are talking about Brent crude crossing $100 per barrel, that was the only time the alarms had started ringing that oil crisis, oil import shock is present there. Because as of now, we are clearly aware that 85% of India's oil requirement is imported. Yes, India has a brief relief here in terms of the 30-day waiver that has been given by US, but that has been given for Russian oil, and Russian oil will be demanded by all because that is the only free area. Because when we are talking about the choked Strait of Hormuz and the Middle East oil economies present there, they are stuck. So all in all, this is also something that is already in play, because we start with war in Gulf, it clearly comes to oil supply risk. That leads to Brent crude prices going above $110 per barrel and India paying more for imported oil. That means our import bill is clearly going to rise. So if our import bill is going to rise, we are so sure about it, then our current account deficit will also see an impact, that is also going to widen. Clearly, because oil is one of the largest components of our imports. Now, once our trade deficit widens, then current account deficit also rises. That means our external vulnerability will also increase this. Analysts have already warned that if Iran war continues, it is prolonged, then we can already expect that India's current account deficit can be somewhere between 2.5% to 3% of GDP, and this is only related to oil that we are talking. We are not taking in consideration, when we are talking about Iran war, we are talking about a huge diaspora which lives there. I am talking about almost 9 million people here. The remittances, which have already taken a huge hit because of this war, very similar to what we saw back in Gulf War in 1990. So this is another factor that is going to unfold and affect our not just current account deficit, it is going to affect remittances, then it is also going to affect our foreign exchange reserves. And this pressure, all of this is going to further add up to rupee depreciation. Rupee has already hit the historic low, that is 92.33 per US dollar. So oil import requires dollars, that means the demand for dollar increases. When demand for dollar increases, rupee will weaken. Imports will become more expensive further and imported inflation will also rise. So when we are talking about import shock, this is not just it when we are talking about import related problems. Import is getting expensive, it is going to bring in inflation, and that is when we would have problems for monetary policy decisions, because RBI would have to decide, do we want to control the inflation, that means reduce the money supply in the economy, or do we want to push growth, that means increase the money supply. So what will be the trade-off? The trade-off will be between growth and inflation in itself. Now when we are talking about inflation shock itself, inflation, you have to understand, it starts with oil price rise. It will translate into petrol and diesel price increasing. That means transport cost will increase. Transport cost will increase. The food, the goods, their prices will increase. That means your pocket is going to hurt more, burn more, and CPI inflation will also rise. Now RBI would want to curb the inflation, that means they would have to control the supply of money. If they control the supply of money, growth will be compromised. So we don't have only inflation as an issue just for consumers, but for the government as well to understand. Apart from that, businesses would be hurt by increased transportation cost, increased fuel cost, increased logistics cost, increased shipping cost, especially when we are talking about trade through Strait of Hormuz, Persian Gulf, Middle Eastern. The exports that we were doing to this particular region, they are suffering, especially food related items, agricultural commodities, gems, stones, and then we have few other industries which are taking a huge hit in terms of exports that we were doing. So one source of foreign currency already taking a hit, exports taking a hit, fuel subsidies taking a hit, and add to that, we also have fertilizers. Because a major import apart from oil is fertilizers, which comes from Middle Eastern region. So the fertilizer subsidy, that might continue for the farmers, but the burden on the government will increase. So the government burden also added to that. And what we have played out here is just the tipping point. if all of it materializes full blown because of the prolonged Iran war, then yes, Indian economy is going to actually bear the burn from the flames coming from the extended neighborhood. What are your thoughts on this? Let me know in the comment section. That was all from my side. Thank you so much.